Good morning, traders, and welcome to another video. And I hope everyone is doing well. So in the previous video, I've mentioned that the GER30 is going to take out this high here, as you can see. And yesterday we saw price going up and taking out this high. And what I expect to see from today is that I expect to see a reversal around above this high, and then we can expect price to drop down to this level here and then to cover this range here. So basically what I'm looking for right now on the GER30, I'm looking for sell setups. So on the 15 minutes time frame, I'll be checking out for sell signal setups. If I see a sell interbank sell setup, I'm going to sell the GER30. So the direction now changes for me to the bearish side. Let's have a look at the 15 minutes time frame chart here on what is happening today. So as you can see, price just opened here. Let me just mark the open. So price opened here and then traded a little bit above the opening price, and then after it just dropped, violated the opening price, just decided to drop. I think this morning I've entered a sell around here. This morning I've entered a sell around here. Is already in profit. So these are the kind of trades that you need to have experience for you to take them, because I don't only take the interbank repriced entries only. So if I see a setup like this, which is high probability that, okay, the market is going to go down without going up, I'm going to take that setup. So this is based on experience. If you don't have experience in the market like I do, it will be hard for you to get the setups like this one, because you'll think, okay, this is the double bottom. It means that I should buy, and then after that you see price dropping down. So I sold, and I expect price to continue to go lower for the rest of the day so that they can cover this range here, and then we might see price starting to go to the lower side of the market, taking out these lows here. And yeah, guys, that's what I expect to see on the GER30. It's nothing complicated. It's just simple stuff. You just look at what price is doing at the moment, and yeah. And yesterday on Nasdaq also, we had Nasdaq gave me a nice interbank short entry, guys. This was a nice, one of the nicest setups that you could get. As you can see here, it was exactly at the 75% interbank short level, guys. So once price hit this level yesterday, I just saw, okay, this is going to drop now. And then I sold. And then you can see how fast it was. One candlestick going down. The next one is just a little bit of doji to confuse you so that you can buy and then think that price is going to reverse and go up. Then the next candlestick was the killer, because this one was it was very aggressive. The reason for a candlestick like this, they know that you buy in this candlestick, you put your stop loss here, and then they take it out immediately. So this is why when you are trading, I don't suggest that you look at the candlesticks. You don't use the candlesticks to trade. I know that there are patterns, candlestick patterns or whatever, but those things are not reliable. You need to know your levels, the bank levels, where the banks are buying and selling. That's where you're going to get your best entries. As you can see, this was a zero drawdown entry. You sell and then price just reverses immediately. This is what we call a high probability setup. And then another thing, it was the Dow Jones yesterday also. It gave me a similar setup, but then with the Dow Jones, again, experience come in play here. You can see with the Dow Jones, it didn't touch the 75% interbank level, but then I sold it. Why did I sell it? It was because Nasdaq touched the 75% level and then it reversed. It showed rejection at that level. So Nasdaq and Dow Jones move the same way 80% of the time. So if I sell Nasdaq, I'm going to sell the Dow Jones also. So I just saw, okay, they won't touch this level. They don't want to touch it today. So I'm going to sell here. And then exactly the same thing happened. One big candlestick going down. The next just a little smaller candlestick. And then the next one was aggressive just to complete the move. And then they took out the opening price here, as you can see. And then they gave you a little bit of retracement here. And then after that, they push price towards the close of the day. So it's not complicated stuff. These things are not that complicated. You just need to simplify this trading and know your interbank levels. Once you know your interbank levels, everything becomes easy in the market. So you're just going to trade nicely every single day and know what you are looking for in the market. So let's take a look at the daily time frame, what is happening here, what we can expect to see. So as you can see here, this one is a bit tricky because yesterday we got a sell setup and then you can see the range that we are trading inside now. You see it? So there's a possibility that they can go for this low or they can go for this low. But with the interbank strategy, we know we just mark our interbank levels on the 15 minutes time frame. If it gives us the buy setups, we take it. If it gives us the sell setups, we take it. It's simple as that. So that the candlesticks, they don't matter. Like today, yesterday we can have a bullish candlestick. Today we can have a bearish candlestick. It's just how price moves. So with experience, you just know this thing. You know how to spot these things. And then this is why it is important for you to wait for the right setup to trade. You just don't jump in the market and trade anything that moves. Like right now, price is moving, but it's London session. We know London session, Nasdaq doesn't move. It's just manipulation. So we're just gonna wait for New York session. We're just gonna mark our interbank levels on the 15 minutes time frame and wait for New York session. When New York opens, we're going to get a setup and then you buy or sell based on that setup. Simple as that. So don't complicate trading. And then you can see it's the same thing here. We have this high and this low here. So price is currently trading inside this range. And then it's in the middle of that range, as you can see. So it can either go up or down. So we don't know right now where it is going up or down. But based on my analysis on the GER30, they are likely to go down because of the GER30. So GER30 took out those highs. And then after that, we can expect the reversal. And also here, these ones didn't take out their highs on the daily time frame. So just like that. Let's have a look at gold. Gold is another thing, man. Gold, just buy the dips. So it's just risky to sell gold. They are likely going to take out this high as time goes on. You can see even today's candlesticks started being bullish. So they can just push price to take out that high. So we can say we are trading inside this range for gold right now, as you can see. So I have less to say about gold right now. Just buy. When it goes down, just buy. It's simple as that. So yeah, guys, make sure you like the video and comment whatever you wanna comment below the video, and switch on your notifications, guys, so that you don't miss the next video. And I'll see you in the next one.